So I'll have a go at describing roughly what I was seeing there and what the potential was. So I'm gonna move to drawing pen rather than taking absolute control yet, because I can then draw on the chart. Okay, so I suppose the first thing that one notices in the period we're talking about is basically all the way through May and June. The first thing one notices is this zone here, which had consolidated, which is what we've just been talking about. And we've got lots of resistance levels all the way across the top here. And we've got various support levels down here that are set up. Now my Narvas support and resistance indicator helps you identify those more clearly. You can see very clearly where they are. And what I was looking at then was, let's go back in time a bit. So we go back to the dotted lines that I marked on. There's a point of interest here, and another point of interest here. We could have chosen this one down there, but that basically got the line got broken, as you can see. If I drew a line there, this one rejected through it. So when we were in this zone, I wanted to pick out the lines that had no projections through it as being the basis on what I was going to use. We can see we've got this uptrend, and obviously, as per normal, the trading will always move up and then pull back and move up and pull back and have this kind of wave effect in it. And we can see essentially that we've got this move up like that, and then we've, in a way, we've got kind of got a consolidation here, which it penetrated and reversed back into. Okay, so when it broke it the second time, it already had a go at running out. So we'd seen this push out of this essential rectangle here, which at that time we at the time of it running, we saw this first part set up. Then it broke out. A lot of people trade the breakout, and it broke out and then it pulled back in again, which would have disappointed a lot of people as well. And then it broke out again at this point here. Okay, so that's the sign that it's gone again. It's already got the used to, effectively. People have psychologically got used to the price being up here, even though it's pulled back. And there's a collective unconscious about prices in anything, whether you're buying cars or vegetables or you know, fruit or oranges or whatever it is that you're buying. You have a notion about what a price is, and there's a retention in your mind about, you know, what is a fair price. And so what's happened here is all the way through this zone here, everybody's considered that to be a fair price, and every time it's tried to go to the upper side of it, everybody said, oh, that's a little bit expensive, that's a bit steep, and it's pulled back down again, and then everybody's gone, oh, that's a little bit cheap again now, I think I'll buy it now, and it's gone back up again, and so it's gone with this consolidation zone. And then finally there's been enough interest that pushed it out through the top, and everybody said, no, actually it's worth more than that, and the price went up. And when it got up there, a lot of people that had been in this zone here decided, well, actually I'll take my profits now, actually I think that's high enough, and it's pulled its way back down again. Alright, so this kind of stuff's going on in people's minds, and the chart reflects those thought patterns, and how you interpret it is obviously, you know, down to you or any individual to interpret it how you see. But with hindsight, which this is, you can see that what happened was there's this consolidation zone where people were saying, well, it's fair enough there, when it gets to there it's too expensive, when it's there it's too cheap, and then it broke out, and then people there decided, oh, I can take some money off the table here, I've got a profit, let me take the profit, and then it's pulled back down into the same area as it was before. All of these support levels That's right. All these support levels are places where people said, oh, there's value. Okay, so it broke out, hit that. That's right. It broke out, came up there, came all the way back again, came back to the bottom line again. Okay, and then it went again. This time it broke straight out. Now this move like that up was quite strong, and then it hit another level, and this is another consolidation level where it keeps jostling from top to bottom and so forth. Okay, now that's also called a flag, like we had here. We had a move up like that. That's known as a flagpole. Okay, and when you see this pattern, typically with a flagpole, as we did back here, we had an odd-shaped flagpole here. But anyway, let me just draw it in for you. There's a sort of funny kind of sliding flagpole here, but it went up and then basically consolidated. It pushed up, pulled back, came into that zone, and then ran. Okay, so you can see that this is a sort of structure that will happen, and it's all to do with people's psychology, when they think it's expensive and when they think it's cheap. Okay, and when it's pushed like that and rejected back in, it's created a zone of belief that that price is okay, even though it's pulled back. So when it goes again, it often will break straight through that zone. And as you can see here, it's the top of that zone has become the support of the next one. Okay, and the top of this zone was not the support of the next one. The next support was higher than that. So what we've got going here is this idea of consolidation, breakout, next level, consolidation, breakout, next level. And we've also got the idea that when it breaks out, not always, but when it breaks out, it can often break out and then pull back into it and then break again. Now sometimes it just breaks, so you can't rely on it breaking out, pulling back and then breaking again. You can only say that that is something that happens. Okay, it doesn't mean it will happen, it just means it can happen. I'm going to draw some of that stuff back on the screen again. Too quick, yeah. So let's say we've got this zone here. Okay, and that bit was a flagpole going up like that. Okay, and that's the flagpole. Then we've got the zone it's moving around in. We've got the breakout, the pullback, back to the bottom, and then the run up. Next time we get another level here. Okay, these positions aren't exactly precise, but they are zones. They're zones within which things happen. Okay, and we've got that zone, and this time again, just like it did the previous time when we had that zone breakout pullback, as it happens, but not guaranteed, it broke out of that zone up to there, and then it came back to there, which happens to be roughly the same level, like that, if you imagine the box. And then it broke out of that again, and so this time we now got a new zone, which is roughly speaking got set up like that. Okay, now sometimes the places it goes to is exact, and sometimes the place it goes to is the zone. So you have to be mindful of that. And then when it broke it, having pulled back into it, it broke with a rush. And it often does that when it pushes that penetration spike up, it gets everybody used to that price. So when it goes again, it breaks the top of that in quite a rush. It's a typical thing. So at this point here, everybody was wanting it to break up again. The expectation would it would do the same again and it would break out upwards. But in this particular case it didn't, it broke out downwards. And we had a small consolidation in there, and then the move back up again into this bit there. So, and as I was saying, I've got a line from this point there through to the line of this point here, drawing the line up, and this penetrated that trend line, penetrated below it, which gives more understanding that it may well be turning and going bearish for the moment. It then broke out here and it hit a high which was more or less the same as those lows. So this high, that was a support level, and this became a resistance level at that level there, which then caused me to believe that it might drop away from there, which it did. So the original support became a resistance level. That's exactly how I was reading it. So that then, you know, I've got this box there, and then I've got another box there, and my Darvas lines help point that out to you. So when it broke down again there, it was similar to the ones across on the left here. Okay, there, where it pulled back in and then shot away because it broke that level. This one here, it dropped out, pulled back in, and then shot away below that one, and that support then became our new resistance here. And you can see there once the BBBR moves back up again, which is my new refined bull bear butterfly, you can see how it changes over. That tells you where we're at the moment. So if it's an additional aid to understanding where we're at, what's happening with the trend, what's going on. And typically if you try and trade against what it's saying, that's not to say you shouldn't, because reversals do happen, but generally speaking it's better to trade with the direction of what it's telling you. Okay, so, and that's why my alert system is set up so that you can tell it, I'm only interested in trades where the bull bear butterfly is above a certain value. I'm only interested in trades where the litmus indicator is above a certain value. I'm only interested in trades where, and so on. And it also gives you, as you know, but I'll just say it for the purpose of the video, it also gives you details of each individual trade alert to give you an idea about position sizing based on your own risk profile. And I recommend less than 1% per trade risk, which will keep you in the game a lot longer and still make you money. Because a lot of things that people will blow out when they trade, they'll overtrade, they'll put more money on the table than they should. And the effect of that is, when it works out, is brilliant. But the effect of it when it doesn't work out is catastrophic. And the odds are, if you're a trader, then once you start trading seriously and you start putting trades on, you're going to get maybe 5, 6, 7 trades in a row that are going to go wrong. And if you're trading with big amounts of money, it's going to be catastrophic. Whereas if you trade with smaller risk profile, then it's going to be just, okay, it's one of those things, it's just life. Okay, because trades are going to go wrong. It's inevitable. So should we stop? Yeah, pleasure. It's a pleasure. And we'll close this session now, and we'll arrange another session on another day. Okay. Do you have an idea about when you're thinking of for you?